Everybody, I'm Giuseppe Basilio, also known as the FibStalker. Thanks for watching this video. As usual, I'm publishing here the weekly review. So this is part one. I'll publish part two later on tomorrow morning, this is again, this is part one here. And today is May the 14th, 2018, and this video is part of the FibStalker Asian trading service. As usual, I ask you to read the disclaimer here, pause the video here if you've never read this before, and please accept the usual disclaimer. So let's dive into the markets. We'll start from the SP 500 as usual, as I've mentioned also last week. It's very likely that we're going to see previous highs here trading in the SP 500. That's what we're seeing here. Even if this market pulls back, and that could happen after the 2749 is pretty on the upside. If that happens, if and when, then this market could pull back, and that could be an opportunity for a buy. However, this market could also just continue higher here in this move. The dollar index is in a very important juncture, and history here will be written. We need to understand whether this is just the next measured move short, and you remember that this market actually, we can show this on the weekly as well. So we had a first measured move that was a busted setup, but the market continued lower anyway, and went into the first and second target, and then we traced the lows, two lows that traded, progressing to the first target, and now the second is trading. So it's not given that this market will just continue higher. Okay, in fact, there is a sequence of measured move short here, which is still intact. So we need to be very, very careful here, not assume anything, because this market could just come back down and either retest this 89.52 or even continue lower. Of course, if the 93, 96, 94 level is based on the upside, the scenario is going to change. Okay, but everything is still open here. So I'm going to review the US dollar Singapore dollar as well, which obviously showing the same thing, and in fact it's even more aggressively selling here. And as you can see here, we might this week break this 133.08, in which case the next level is going to be the 132.48. okay, so nothing is given here. Let's not forget also that this market has dipped well into the area here between the 50 and the 61% level. So this market too, which obviously it's a proxy of the dollar, so will follow the dollar index here. That's what we're seeing at the moment. So we're seeing weakness here. So that means that if this continues, and this was just news or expectation about interest rates, but obviously the US does not have any interest that their dollars goes up, right? They want the dollar to go down actually, because they have a lot of debt and they don't want to see a strong dollar. Also, there's a currency war going on in the world, and everybody is trying to keep their currency down, not raise the interest very quickly like New Zealand. So we need to be very careful here. New Zealand dollar, US dollar, starting from the majors here, this market has traded short and has not traded long yet. That would be from lows to highs here, and that has not come into play. The 68.40, 50, 68.50 here, which I mentioned that could trade. We'll see if that happens. And there's an extension here at 70.30. If that comes into play, is the same level as last week. Australian dollar, US dollar has broken the sequence of the sequence of measured move short here on top of a valid 50% level. So technically this market is in a long. Okay, and the sequence was highs to lows here, and then sorry, highs to lows to the first target, and then the next measured move was highs to lows, and it went to the first and second target, and the extension was as failed here, okay, clearly. Okay, so there is no you know this market of course could retest the 74 80 level again, but that technically here, if we look at the smart money, would be another sell, another buy, sorry. Okay, because we actually have broken the sequence here after the 50% has been tested. So technically the smart money is in and is in long. Euro dollar, the euro dollar will follow what the dollar index is going to do. Okay, so if this is it, this is it. If this is the end of the move, we will know, and we don't know that yet. Remember, in the past we used this level here, highs to highs. That high has not come into play yet, so this might come into play, and then we could have a continuation high, because you have to consider that as well. Okay, remember that we found this level after the fact, and then what we said, we used the aggressive move here, highs to highs, and with that we have established the failure of the sequence here. Okay, but that's an aggressive move. There is still the next measure move long, and that would be from the same anchor to new high. That has not traded. That has not traded. Okay, I don't consider that traded, because it's 117.87 and the low here was 118.21, so talking about 35 pips, 36 pips. Okay, so that never came into play, but it could come into play, and then we will need to respect it if that's the case. Okay, so still everything open here when it comes to the direction of the dollar, and as a consequence the direction of the others. Now the pound versus US dollar here has been very weak. I'm using here an extension short, doesn't matter how precise we trace that, but there is a potential for a continuation short around these levels here. The 50% short has never traded. Okay, of course, it all depends also on what the dollar index is going to do. In here we have notable anchor here, first of 3 longs bars to lows. If that comes into play, that could be an area for a continuation short, but again the dollar index will tell. US dollar Swiss franc, it's kind of moving laterally here, as we can see, and this market might reverse part of this strong move higher, and obviously if the dollar index corrects, this is going to correct as well, trading previous highs. Of course, you could continue to the higher highs there, and the 50% setup is there for that, but we will need to see. And if we get a correction and then a continuation higher, this market could give us an opportunity for a trade. The 98.50, it's there where it should be. That's the extension long if we get a deep retrace. The US dollar Canadian dollar has traded the shorts. If you remember, it went to trade there mid of last week, the 129.29, and that realigns this market with the potential scenario for the dollar index, as well as what has been happening in this market in the last 2 years basically. Okay, so since 2016 here. So the lows could continue here, and we would like to see a proper setup here. If that's the case, if that happens, 50%, this market is extended though, so a 4-hour setup might be in play there. Okay, so according to what we see, this market should continue lower. US dollar Japanese yen, it's retesting that 50% short, and obviously if the dollar index reverses, this market is going to reverse. Remember that the 170 is still waiting there, and this market has been moving laterally. Long have not held, and before that short have not held. So that's what we have in this market. It's a lateral market that is now also trading 50% short. Okay, so I would say it's a market with a downward bias, which is moving laterally at the moment, and it has respected the 109.70. all right, US dollar Singapore dollar, we reviewed that already, so we're seeing a weak market here, and if the 33.08 breaks, then you would see lower lows. Gold here still holding on that famous 1310. We mentioned this level many times, and holding here for many weeks and months, and so far has been respected. So if we were just looking at gold, we should say that this market, if it stays above this level, it's ready to move higher, and gold is in a large lateral move here, and this kind of consolidation are either reversals or continuation lower. Now this market is also trading from the low of 2001, not 2002. It's trading at 50%. We don't see that here, but it has traded at 50% long. And in a way, if we consider this as the anchor here, that has failed as well. So that would build a case for longs. We will see if that's the case. The dollar index should continue lower in order for that to happen, and we will see if that's the case. Okay, silver very weak but recovering here, and let's not forget that it also has pierced that level. In a scenario where the dollar index will continue higher, this would actually continue lower, but that pierce may also indicate the opposite, that silver now it's ready to go higher. And in fact, if the dollar index will continue to move lower, we know that this level is not there any longer, okay, because it was pierced already, which means that the next level is going to be the 19 level for silver. All right, so this ends the first part. I'm gonna publish the second part later on today, and I have a webinar tomorrow morning with FX Street, so I've been working hard to prepare the material, and I'm gonna share that important webinar with you guys. So I'll talk to you later about that. Bye bye now.